G'day folks, welcome back to another update for Bitcoin and Ripple. Now this thumbnail is getting a bit stale. It's still in a downside momentum on both charts. We'll go to that in a minute. We're going to include some back testing as well. But also don't forget to go to the +1 videos to get a deeper dive into the trading strategies we cover, which we might be glossing over in this video. Also don't forget to hit that like and subscribe to support the channel. In terms of the outlook, Bitcoin shows robust fundamentals with institutional backing and favourable macro conditions supporting continued momentum. Conservative upside targets are in the 120,000 to 150,000 range, but upside to 200,000 is possible in a bullish scenario. Ripple has compelling long-term use case drivers, but is far more volatile. Modest gains are plausible if support holds. However, significant upside above $5+ remains speculative and contingent on major catalysts. So we always look at the long-term trends. This is Bitcoin on the weekly first off. You can see there it's still somewhat bullish, although the price has pulled back into that moving average range. And notice the CCI is declining below its respective moving averages. Now also notice we've got a bearish divergence. Lower highs on the CCI versus higher highs on the price. That's a bearish divergence. And what I've got here, we've drawn a target range here, and it's not far off that target of a divergence pullback. If I drew a Fibonacci retrace, in terms of how we identified that target, it was back down to this area, I think. Yeah, down to that low there. It's coming on, it's approaching that 23-38% range. So we take it back to the previous low before that divergence started, which was that point there. So that's a significant low before where that divergence started. We had another smaller divergence in this range. That just missed out. And since then that was invalidated and we raised the target to that new high there. So again, not far off that. Looks like it may hit that in the coming possibly days or even hours. This is the weekly chart. And if we look at the daily as well, now that's already broken below the price moving averages, but also it's been in a downtrend for a number of days now below the CCI moving averages. Also notice we had another bearish divergence here. These are independent from each other, from the weekly and the daily. That 23-38% range has been hit and currently in that range. Currently no sign of a pullback yet on the daily, with the CCI still dropping off. If we look at the hourly chart, again, been a bit of a roller coaster there, but predominantly taking short trades only, because remember we only take trades in the direction of the higher time frame. That's why I've got this arrow here. So if you're trading on the hourly or the intraday time, you take short trades from there only. You don't go long. So you would have taken these short trades for each of these declines. And currently you'd be in a short position if you opened it up on that candle there. You'd be gaining a few pips to the downside and waiting for that CCI to break into that moving average range to close out your positions. Now if we go to the back test, what I've got here is from using the daily chart as a reference, going short only from that candle there. It was about the 18th of August, around this period. You would have taken short trades only. You can see there we've had about what's that, 4 or 5 trades. A couple of times they've averaged down, and you would have taken no short entries to the downside. Also pay attention in terms of the divergence. We had a bullish divergence here, so if you're going short, you would have watched this very carefully and wait for that bullish divergence to start playing out. You can see that one hasn't been reached. It bounced close to it, but then it kept dropping. This one finally broke into that divergence range and hit that target, and then it kept falling again. But overall, you would have made about $4,000 going short in those few trades since around about the 18th of August. So this is Ripple. First off on the weekly, you can see there it's above the moving averages, but again notice we've got a bearish divergence on the CCI versus the price, and the price is currently in this flag range, but it's slowly dropping to the downside towards these moving averages. But somewhat neutral positioning, I would say. Don't go long or short on the daily if you're trading the daily in the direction of the weekly. You'll wait for that to break to below those moving averages to take short trades, or wait for the CCI to break higher than those moving averages and for the price also to start rising to take long trades. At the moment though, on the daily, you can see there they're both, the price and the CCI are hovering below the moving averages, giving us short positions only, and I've marked it there, going short when the price and the CCI have broken below the moving average from that candle there on the 14th of August. And what I'm looking for is any divergence, and there was no divergence currently in play. And if we go to the 1 hour chart, again you can see there it's hitting this current support at 273. The CCI is broken below. There's no sign of a pullback yet. It could possibly bounce off this or actually fall further to the downside, and again you would have gone short with one of those candles dropping below that moving average on the price and the CCI, and you would have kept that trade open and wait for that CCI to break into that moving average range to close out your positions. Looking at the back test, again going short from around the 14th of August back on the daily, based on the daily, you would have traded down during that period on the 1 hour time frame. You can see there it's entered a couple of times, probably half a dozen times, and in accordance with this strategy that we're using, we wait for the CCI and the price moving averages to break to the downside, but we also wait for a CCI 14 in this little indicator here. And this one going short in those half dozen trades would have generated about $49,000 if you were trading $5,000 lots per contract. Hit that like and subscribe button to support the channel, but don't forget to also reference the Patreon page where we look at weekly bullish shares, which we do a scan each week. Thanks for watching and see you in our next video.